Novo Nordisk is scheduled to report quarterly financial results on November 5, 2025, and investors are asking me if they should buy this stock before the company announces these figures. I'll answer that question in this video, as well as highlight the big picture items impacting Novo Nordisk stock and share with you my fair value calculation for this business.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Novo Nordisk stock is down 7.4% over the previous month, while the S&P 500 index is up 3.5%. So it's underperforming by 11%. And some of the reasons for this underperformance is most notably declining revisions for its earnings per share expectations in 2026 and 2027. Novo Nordisk is facing increasing competition for weight loss drugs, both from its branded rival Eli Lilly and from compounders that are still selling these versions, even though they're not supposed to be selling these versions. Now, Novo Nordisk is undertaking litigation, trying to sue some of these compounders and get these compounded versions off of the marketplace, and therefore make Novo Nordisk and Eli Lilly's products more attractive because consumers will not have those lower priced options. Furthermore, Novo Nordisk is about getting set to launch the oral pill version of the weight loss treatments that's likely to open up a broader market opportunity. So that's the positive. The downsides, of course, the United States administration right now is attacking a lot of these healthcare companies, including pharmaceuticals, for what they perceive as pricing that's too high for U.S. consumers. And they're trying to strong arm these pharmaceuticals into lowering prices and offering their treatments at more affordable options. This is creating a negative sentiment from investors surrounding the company. But I always like to take the contrarian approach to government action. What do I mean by that? Well, let's go back to 2020 when the then Biden administration and the government in the United States was very much in favor of encouraging electric vehicles and the purchases and the production of electric vehicles. So investors jump into all of these EV stocks thinking that the EVs are the future and EV stocks are going to do well because the government is going to force people to buy electric vehicles. Well, fast forward to this year in 2025, the now current U.S. administration is reversing a lot of those the regulations that were in place in 2020. So a lot of those EV stocks that investors were hopeful about in 2020 that I warned investors to avoid because government regulation is always swinging back and forth. You can't rely on it to be one way for an extended period of time. They're now suffering the consequences. Most EV stocks are down significantly from their 2020 levels. Some of them are even bankrupt and out of business, including Fisker, Nikola, and others. So that's why I take a contrarian approach. When everyone is down on a certain industry because of government regulation, you have to take a longer term viewpoint and understand that while the current administration might be undertaking certain policies that's negative for the industry, the next administration might take a different approach, or the one after that might take a different approach. So when you're investing, the present value of the business should take into consideration what you expect this business will generate in cash flow over the very long term, not just for this year or next year or even the year after that. So typically when you have an administration that's attacking an industry and depressing valuations and stock prices, that can sometimes be an opportunity. Not all the time, but it can sometimes be an opportunity. And I do see that as an opportunity for these pharmaceutical stocks. So when taking a very long-term approach to Novo Nordisk, I calculated a discounted cash flow valuation, and the fair value of the stock I calculated is $134, but you can buy this stock today for $49. So I view this business as being significantly undervalued, and some of the reasons for that I already talked about. Now, to answer the question, should you buy the stock before it announces earnings? I think it's undervalued enough where you can buy the stock before it announces earnings. If you want to take a lower risk approach, you can buy half before earnings and half after earnings. That's a reasonable strategy as well. You can also buy the stock after the company announces earnings and you digest the figures, all of which depends on your risk tolerance. If you are looking for the riskiest option, the option that also comes with the highest potential reward, you can buy the stock before earnings. And when I say the highest potential rewards, I mean for long investors if you're going long the stock, because there's also the other side of the risk, which is the risk of missing out, which means if you wait until after earnings to buy the stock price might be 20, 30, 40% higher after earnings if there's something significant in the earnings release. So you're taking a risk either way. You're taking the risk if you buy before earnings, you're taking the risk that the stock price declines after the earnings release. If you wait until after the earnings release, you're taking the risk of missing out on the upside. Now, whenever I'm in this situation where it's like 50-50 and I don't know which one to do, I typically wait until after the earnings come out because I would personally rather take the risk of missing out on the upside rather than taking the risk of losing my money. I prefer that risk better. But sometimes I feel like it's not a 50-50 situation. I feel like I have more value in buying the stock ahead of earnings because it's undervalued enough. And I feel like the earnings release can be a catalyst that brings the stock price closer to the fair value I calculated for the business. And this is one of those situations where I see it as one of those areas where I'm more strongly in favor of buying the stock ahead of earnings instead of waiting until after earnings because I view this business as being undervalued enough. Now, there's still the risk of downside. The stock price could still fall after the earnings release, but all things considered, I feel there's more value in buying this stock ahead of the earnings release. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.